And Dr. Roubini, this year has been very dramatic. Some of the predictions that you've made, which a year ago many people thought were extreme, have actually come to pass, particularly in terms of the problems in the financial system and some of the systemic problems in the financial system around the world. Looking back, what do you think are the main causes of the crisis we're in? Because there's so many things happening so quickly, sometimes it's hard to focus on the root causes.
Well, the way I would summarize is that rather than having just a subprime mortgage problem, we had a subprime financial system. Excesses of asset bubbles and credit bubble went well beyond mortgages, also commercial real estate, credit cards, auto loans, leverage loans that financed LBOs that should never occur, the excessive indebtedness of some parts of the corporate sector. What led to all these things? Many causes. The Fed kept the Fed funds rates too low for too long. That was the first mistake. Easy money, easy credit. Lax supervision, regulation of financial institutions. All this toxic underwriting was occurring. The Fed, the other regulators, the SEC was asleep at the wheel. This Madoff scandal is a symbol of exactly what happens when the SEC is not doing its enforcement. Plenty of those other things happen all over the map. And we had a situation in which also there was this global savings glut that was keeping long-term rates low. There was this search for yield. There were governance problems in the financial institution, excessive risk-taking, the way we compensate the bankers. That was another problem. And finally, rating agencies had their own conflicts of interest being paid by those that were supposed to be rating. So the culprits of this crisis are many and different ones. The Fed, the regulators, the greed and arrogance of Wall Street, the rating agencies. It was a huge generalized asset bubble, and was not just in the US, it was globally.
And there's a lot of focus now, particularly on the regulatory side, and possibly rewriting the whole regulatory map. What do you think the financial system, or essentially the capitalist system, will look like in a few years' time? Do you think regulations will change so much that the future financial system will be very different to what we have in place now?
Well, the financial system has already changed radically. We've had the demise of the entire shadow banking system. Most of the broker-dealers are either gone or have been forced essentially to become bank holding companies. You have the roll-off of the sieves and the conduits. You have had the bust of all the non-bank mortgage lenders. We have now run even on money market funds. There are hundreds, if not thousands, of hedge funds going to go out of business. So a lot of the shadow banking system is going to be folded in the traditional banking system, and the regulation and supervision is going to be much more aggressive. The times of self-regulation, that means no regulations, are gone. The times of just market discipline, that means no discipline when there is irrational exuberance, are gone. The times of just relying on internal risk management, that doesn't work because when the music is playing, you got to dance and nobody's listening to risk managers, are gone. And the times of relying just on rating agencies is also gone. We need more rules and less principles, and more hard touch rather than light touch. And I think they will have to move in this direction. It'll be a very different financial system.
Can we have confidence in regulators to do this? I mean, you mentioned the Madoff situation, a potential $50 billion fraud. The details, of course, are still very sketchy. But how can there be confidence that regulators will actually be able to change enough to keep track of the way the financial system operates?
Yeah, there is always a question of who is, first of all, regulating the regulators, a risk of regulatory capture, has essentially lobbies in the industry control the regulators. I think there'll have to be significant amount of fiscal resources devoted to appropriate regulation. We need more regulators, more auditors at the Fed, at the SEC, and the other regulators. Has to be a policy commitment to make sure these things don't happen again.
Is there a risk that the capitalist system doesn't recover from this shock?
I think that the appropriate policy actions are going to be undertaken. We're going to avoid a Great Depression and a severe recession, even if there is a risk of protracted slow economic growth. So I don't think this is the end of capitalism, of market economies, but it suggests that really there are significant market failures, that markets don't self-regulate each other. There are market failures, there are booms and busts, and those become dangerous and very costly. So there has to be an appropriate role for governments, for prudential regulation, for fiscal policies to make sure that the financial system and the real economy and market economy works the way it should be working.
And are you involved in advising the future Obama administration about how things should proceed?
I'm not directly advising the administration. I'm of course in touch with a number of members in the economic team. I've had a dialogue for a long time with them.